order to support that type of growth, which is not going to be a 10x, it's a million or a billion x in terms of like the power of what an entity can do. And that needs permissionless innovation. It needs payments. It needs the ability to save, store, send, get yield. Then you're taking a look at all of these assets. There's more proliferation. There's more trading. There's more speculation. There's more saving. There's more access to capital and debt markets than we've seen before for everyone worldwide. And I think that's a mission worth fighting for.
Hot off the presses, yesterday, I have to ask the question, CoinDesk reported that Kraken is again back in market raising, or I should say Payward is back in market, raising more capital at a $20 billion valuation. Feel free to comment on that or not.
No comments on
No comment. All right, next question.
Actually, I don't even know if this is working, but yeah, no comments on that.
It's working. It's a no comment in case you guys didn't hear it. But I mentioned Payward. So Kraken, for those who have been paying attention to the industry, but really its parent, Payward, has been on an M&A binge. So Kraken has gone from being a crypto exchange as sort of your crypto trader's favorite crypto exchange, your power trader of crypto assets. But the company has evolved and grown to be much broader than just a cryptocurrency exchange. And part of that has been through organic growth, and part of that has been through an M&A binge. There's been several transactions that you guys have engaged in over the last 12 to 18 months. What's the strategy there? The rise of Payward, I call it, where you have this parent company that has all these assets underneath it. But what's the strategy behind getting that Payward brand out into the marketplace a little bit more and taking this approach of broadening your business?
Yeah, so if you take a look at the company over the last 15 years, and especially in crypto, a lot of what you build is pretty much vertically integrated, right? Where you're an exchange, your infrastructure, you're creating sort of digital accounts depending on the jurisdiction or where your customers are located. And so over the last 15 years, we built our own first-party application. So Kraken Pro, which is for professional traders, so that's more like interactive brokers. Kraken Consumer, that's more akin to Robinhood and Coinbase in terms of I'd say retail and consumers that you serve. And then we built out the institutional house. All of those products were built on top of our own set of microservices and infrastructure. And so what we had decided to do over time is, great, well, we have a very specific mission, which is like, how do we think about open rails, global, permissionless? And I think there's a lot of companies that say that, but then don't do it. And we wanted to make sure that even the competitive landscape in terms of other fintech apps or vertically integrated applications that we're building out, either the brokerage model or the one that access to crypto or eventually now tokenized real-world assets, that we could provide it. And then providing that means access to liquidity, money movement, FX, et cetera, et cetera. And so it seems like we're on a binge, but that's not the case. There's one set of infrastructure that really matters is just global licensing. And so the more in which we can add licenses to our stack, we can promote that for our first-party applications, our customers, but then also anyone else who wants to hook into our rails. And then what we can do is we can just continue to drive the price down for our partners, where they don't have to build these rails in every single jurisdiction, which has been the problem for a lot of folks that are out there. The great thing about crypto and DeFi has been you're able to build permissionlessly as quickly as possible. The problem is that you run into something in each jurisdiction depending on what jurisdiction you're trying to serve the client. So Payward is the brand that we elevated in order to partner with other exchanges, other fintech apps, other banks, other larger institutions that might need those services. So we have forward deployment engineers now going into larger institutions so that we can essentially serve anyone who wants to be able to enhance their products through crypto rails, as you might call it.
So you talked about building both the technology stack as well as getting licensed around the world by every relevant regulator. I want to talk about two recent M&A transactions that you guys have engaged in.
Well, to be clear, I think every regulator is relevant. It's just that who do they serve at that given time? So I mean, we're here in Bermuda. They're a large part of what we do to serve clients, not just within this region, but like worldwide in terms of the types of products that we offer.
Yeah, I mean, Kraken has always been a firm very focused on compliance. And the BMA, if I want to editorialize, is one of the most diligent and responsible innovators in this space. So the fact that Kraken is regulated by the BMA here with its entity, I think is a reflection of its commitment to regulatory compliance. But your two most recent transactions, two of them both in the $550 to $600 million range. The first in April was Bitnomial. It's a CFTC licensed derivatives exchange. And then most recently, in the last couple of weeks, Reap, which is a Hong Kong-based payments infrastructure platform. What will each of those companies under the Payward umbrella bring to your suite of services?
So for Bitnomial, it was just enhancing the stack in the United States. So today, through acquisitions and just applying, we have, ironically, we have 2 FCMs, 2 DCMs, and 1 DCO. And it's for different reasons. Bitnomial had already spent their time thinking about what perpetuals were going to look like in the United States. And for some folks that don't know what that product is, it's different than what you would look at from a traditional futures contract, long dated with an expiration versus like perpetually time duration. And so it's actually a really easy product for people to understand outside the United States. A lot of people use it.
What's the volume of perpetuals in the crypto market globally? I know it's a significant portion of the market.
I mean, if you add derivatives and perpetuals, it's like 90% of all volume, which I think is important because it's an extremely important product that people care about, and it's a part of overall risk management that I think professional traders, at least that we serve, and institutions really care about. And then over time, actually, I think it's just an easier product to understand than options for consumer retail. So we'll be rolling that out over a period of time in the United States. We already have that in Europe and other jurisdictions. But I think what was important is that this also leads the way not just to perpetuals for crypto assets, it's also traditional equities.
And what about Reap?
Reap for us, as I mentioned, was we had elevated Payward in terms of infrastructure and services to as many partners as possible. So exchanges, fintech apps that are serving clients worldwide. When you think about what do you really want when you are serving any of these clients, especially consumers all over the world, it's what we're used to, at least in the United States, which is onboarding and offboarding, treasury management, expense management. Now we're not getting into B2B expense management businesses, but we want to be able to enable that depending on who the customer is. And so Reap's primary customers, Asia, Latin America, and Africa, are all fintech applications. So they're enabling more digital applications through card issuance and treasury management. And so for us, that was a pretty easy way to think about what the addition was going to be in terms of APIs and solutions for partners across the board, including, again, our competitors. And so we want to be able to continue to serve that.
So Kraken Financial is your Wyoming-based entity, and it was the first crypto company to receive access to a Fed master account, which was a huge stake in the ground for this industry, the digital finance industry, and I think it sent shockwaves through the traditional banking system. We co-host an event together in Wyoming that if you guys are Bermuda-based, I would highly encourage you to come to this summer. But the innovation that has taken place through Kraken Financial, your entity in Wyoming, has been tremendous. Talk about that process of getting that Fed master account, why the Fed ultimately decided to do it, and why it's important for your business and important for the reshaping of financial infrastructure in the United States.
Yeah, so we started the application process before my time, actually, full-time at Kraken.
Come on, take credit for it. Come on.
While I was at the board. Jesse and Ton are the 2 co-founders. To give them as much credit as possible, they had the foresight to think about what crypto was going to look like. And part of it was how do you bridge the gap between traditional banking and digital assets and what the rails were going to look like. And so one of the bets was that, okay, well, how do we actually, in some cases, be a part of the banking system, but in a way in which we can innovate. So the SPDI in Wyoming was one of those first bets. That's not going to be our first. It's going to be the first of many when we think about worldwide jurisdictions and what banking means in each market. But the U.S. specifically has the dual banking system. And so the first way in which we thought about it was, okay, fully collateralized assets that we can custody on behalf of our clients. and then what can we do with it over a period of time. And so yeah, we got this what we call the skinny master account, where we're in the process of integrating with the Fed, and then proving out certain milestones around the types of product and services that we'll offer to our clients. I think what's more important is it's not like we applied yesterday and then we got it a day later. We applied 5 years ago. We've gone through the whole process with all the regulators, including the KC Fed, literally explaining our business, how it works, how do we think about custody of our assets, and how do we want to support our clients across the board.
Yeah, there's a few frameworks that have been pioneered in Wyoming that are now being adopted at a national level, which is great to see. And you talked about the different types of licenses and charters that you might go for. There's recent news that you guys are applying for a national trust company charter with the OCC. Why is that important as a next step for the industry in terms of plugging into traditional banking infrastructure or becoming banking infrastructure?
I think one of the things that 20 years ago, when you were a fintech app, or what I'd call like a surface level financial services application, you just figured out ways in which you could partner with traditional banking. The problem with partnering with traditional banking over a period of time is that there's and it's not that they're right or wrong, is that they're not really incentivized to build technology, to do things faster on behalf of clients, depending on who they are. And so we've started on the opposite, and so what you see Band-Aids, 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 Band-Aids. And then in order to be able to build, you have to figure out what licenses you need in order to serve a client. So I think a better way to think about it is like, who are your clients, who are your customers, how are you trying to serve them, and then build the stack.
Reverse engineer from there.
And that's what we typically do, which is, okay, great, in order to serve our client to do X, Y, and Z, what do we need to build? And that's how we built out the company over the years. And so part of the OCC charter is it's not too indifferent to the SPDI, which is, how do we make sure we have an overlay, not just in the United States, but worldwide, to be able to build that trust and character for the clients and what they might need? And then what are the set of assets that we're going to start supporting, regardless of what they are? And so when we think about crypto, you just typically think BTC, ETH, and alts. But I think what's more important is all of the real world assets that will come eventually. I don't think it's going to happen as fast as we think, but it's not as slow as we think either.
So we've talked a lot about, the title of our conversation is Capital Markets Convergence. And obviously, 2 years ago, I would say the traditional banking industry and traditional exchanges were sort of fighting this disruption of financial infrastructure and tokenization. And now I think they've accepted the fact that this is the future. This is a more efficient system of settlement, of trading, of payments. And we've started to see that acceptance bear fruit in terms of these exchanges and these banks investing in companies that are driving that disruption. And Kraken and Payward have been at the center of that. So you raised $200 million from the Deutsche Börse. You've partnered with NASDAQ on tokenized stocks with X stocks. Why do you think they're starting to partner with you now, and what ultimately do you think is the destination that we reach in terms of how NASDAQ, the Deutsche Börse, and other traditional exchanges and banks work with these insurgent fintech companies like Payward and Kraken?
Look, I think the right parallel to draw is when the internet came out and Amazon was there, everyone was trying to figure out, or they were kind of fighting against this wave of what I call innovation. And then you have a certain set of companies that actually innovate and build. And a great example of this is just Walmart, right? Like if you just look at them, they become a behemoth that's large and has been able to continue to compete with Amazon. And then everyone else that was in those products and services kind of just died out, or we don't hear about them anymore. I think what has protected banking and financial services for so long is that A, they're monopolistic in certain jurisdictions. B, they've never had a need to innovate. And C, their business model was protected, especially when it comes to interest on people's assets and deposits, and on and on and on. And so fintech apps, I think, were the first wave, which is like, how do you work with them? How do you still get a certain portion of the VIG? But I think what's happening with crypto is that they know that there is more innovation coming. And it's not that crypto is going to make money off of it or any of these crypto companies. It's that when you start thinking about moving your collateral from traditional siloed marketplaces or fintech applications or financial services and you're moving it into the crypto ecosystem. When you move that full collateral system on-chain or any of these centralized exchanges, there's just a lot more that the customer can do. And you actually feel like you're living in the future, same way in which you think about like what AI and agents can do. And so it's really hard for some clients to turn back. So if you have the ability to do what Jane Street or Citadel does as a professional trader and so on and so forth, do you want to go back in time? The answer is no. And a lot of the traditional financial institutions can't do that, so they have to figure out how they can do that, either by partnering or buying or building it themselves. I do think there's a certain set of financial services that will figure it out, and we're going to partner with them, and we're going to help them as much as we can, because I don't think the world is zero-sum. And then there's a set that just, it won't work, and I think that's a part of natural capitalism, which is, do you compete and succeed, or do you wither away over time?
So speaking of X-Stocks, Kraken acquired Baked Finance, which was your partner on developing X-Stocks, and now it's a fully integrated technology within Payward. X-Stocks has, I think, been a blockbuster. I don't know what your expectations were, but it feels like the growth of X-Stocks and the volume and the number of assets that have been tokenized through that framework has exceeded most people's expectations. I think in March it was 25 billion of volume already on X-Stocks with over 100 assets. Where are we today, and how do you see the momentum of X-Stocks and tokenized equities?
Yeah, I think I always get wary of headlines. Look, we didn't really talk about stable coins in the crypto ecosystem until about maybe 2 to 3 years ago. So it was this slow linear climb, then you had these step functions, and then over time you've had more and more what you call exponential and superlinear growth. X-Stocks is one of many competitors that are out in the ecosystem, and we are having a slow climb. It's a healthy climb, but it's a slow climb. It's not like we're moving towards trillions yet. Like, I think our total AUM is starting to get closer towards $1 billion. That's not a lot, right? Like, just in the grand scheme.
In the grand scheme, it's trillions of assets.
And it's not a lot in terms of our overall business. However, it's really important to be able to facilitate and expand these assets with everyone else that's out there. And as I mentioned before, open rails, open financial products, multi-product, multi-assets, not just on our platform, but for anyone to be able to use them. It takes time, takes integration, takes liquidity, takes compliance. It just takes a lot of work. And so we're happy with the growth that we've had, and it retains, and there's more and more customers coming on. So every day we list a new asset. I think we only have maybe about 80 to 100 assets, stocks, ETFs, et cetera. We're making some more announcements today around the commodity side. And it's a nice, healthy climb. So I always kind of try to temper people's expectation, which is that's going to be a hockey stick when it's a hockey stick, and I'm looking forward to that day. I don't think it'll take 8 years, but it's not going to be 8 weeks.
Right. It feels like the crypto industry is going through a bit of an inflection point. So you have stablecoin adoption, and how stablecoins are plugging into traditional institutions seems to be growing exponentially. You have companies like Kraken that may or may not be raising capital at a $20 billion valuation from tons of blue chip investors, including global exchanges and leading hedge funds and trading firms. But at the same time, you have a lot of crypto assets, some of these tokens that have been around for years now that are stagnating or falling in value. How do you see sort of the industry evolving? Is it going to be less speculative and more focused on infrastructure, or how do you evaluate that sort of juxtaposition between market cap of certain assets and the disruption of infrastructure?
Look, I think you got to take a look back at history. Since the late 1800s, 95% of all companies that have gone public don't exist today. And so, does that mean that public companies are not important? Are companies and equities not important? Of course they are. And that's been the case with some assets over time as well, even in the commodity space. And there's always famous examples of that. And then we just evolve over time. And there's the power law to these assets. There's a power law into the crypto ecosystem as well. I don't know what that's going to look like. Is it going to be 10? Is it going to be 25? I don't know if it's going to be percentages based versus like an end that's very specific. But in the crypto ecosystem, meme tokens, NFTs, et cetera, we're talking about in the millions. But most of the trading volume is still, let's call it the top 5, top 10, maybe top 15. And then we built a lot of products and services and financial services around it. And now we see the next set, which is perpetuating tokenized real-world assets, equities, commodities, et cetera, and perpetuating that again with like access worldwide. And so the question you have to ask is, what does the world look like? At the same time, I think a lot of people are, the crypto kind of has this back and forth in terms of, which I actually like. There's some days it's a very sexy conversation to have around crypto and financial services, and then there's days when 80% value is dropped in the market for those private and public companies. But we're talking about AI and AI agents coming into play, and I think again, you take the headline out in terms of everyone talking about what AI is going to do in the future, is in order for an individual or an entity, similar to how I think about, but I'll take a step back. If you really think about like the corporation as one of the most innovative things, I think like an agent is probably going to be one of the most innovative things in the future. And in order to support that type of growth, which is not going to be a 10x, it's a million or a billion x in terms of like the power of what an entity can do. And that needs permissionless innovation. It needs payments. It needs the ability to save, store, send, get yield. It needs the ability to be able to act on behalf of whatever the future may look like. And that's probably what I get the most excited about, because then you're taking a look at all of these assets. There's more proliferation. There's more trading. There's more speculation. There's more saving. There's more access to capital and debt markets than we've seen before for everyone worldwide. And I think like that's like a mission worth fighting for.
Yeah, capital efficiency for sure. But please give a hand to Arjun Sethi, the co-CEO of Payward and co-CEO of Kraken. They're on fire right now. I have to disclose, we at Skybridge are also investors in Kraken and Payward, and very enthusiastically so. So thank you for coming down to Bermuda to see us.
Thanks for having me.